Welcome to 2023. We are leaving a difficult year behind us. In 2022, we faced a number of challenges, including the ongoing COVID-19 pandemic, war, inflation, and more. The world was rocked to its core and the effects were felt on financial markets. Stock markets took a significant step back, with losses ranging from 20 to 30%. Bonds also took a hit, with the 10-year U.S. Treasury bond, considered the safest investment in the world, losing nearly 15%. Unprecedented. The only safe haven in 2022 was precious metals. Gold saw a small gain of 1%, while silver performed much better with a gain of 5%. These may not seem like impressive results, but appearances can be deceiving. There were massive movements happening behind the scenes. The big players in the market, central bankers, have been busy buying large amounts of gold. It seems that the big capital is looking for an escape. Hello everyone, and welcome to Geopolitics and Money, the #1 YouTube channel where geopolitics, finance, commodities, and investing intersect. Subscribe to this channel to stay on top of the precious metals markets, geopolitics, and investing. Be sure to click that bell button so you'll get notified immediately when we publish a new video. So, in 2022, central banks were buying massive amounts of gold, with China and Russia being the largest accumulators in 2022. You can see for yourself over the past few decades, central banks have never bought as much gold as they are now. We have to go back to the 1960s to see a similar trend. This was a time when the Bretton Woods monetary system was replaced by the US dollar-based reserve system. It was a period of great economic turmoil and uncertainty. Sounds familiar? Once again, we are facing a monetary revolution. This is evident not only in the astronomical purchases of gold by central banks, but also in the comparison of gold versus US Treasury bonds. In this graph, you can see the evolution of the gold price in USD compared to the price of the US 10-year Treasury note. Not only did the price of gold break out in 2022 historically against US Treasury bonds, but the breakout was also successfully tested. Combine this with an increasing acceleration of the 200-week average, and the trend becomes clear to us. Gold is the new safe haven. For financial analysts, the question remains, is gold the best way to play this trend? The answer is yes and no. Gold will be a great investment in the coming years, but you cannot expect explosive returns from a safe haven. The goal of gold is to preserve purchasing power, nothing more, nothing less. We made this clear in our previous video about what gold truly is. For the real price spectacle, we are looking at silver today. In addition to having the same characteristics as gold, silver has an exceptional advantage. It's very cheap. Silver is the only commodity that is trading below its peak from the 1970s. This is hard to grasp that an important metal like silver is being traded today at half of its historical peak. Oil, gold, copper, wheat, all prices are double to multiple times more expensive compared to their peak prices 50 years ago, except for silver. We expect this to change in 2023, as the moment of glory for silver has arrived. Again, we look at a ratio chart, this time comparing gold to silver. In this graph, you can see the longest possible ratio chart of gold versus silver, starting from 1915. What immediately caught our attention is the top at 100 times. The top of the ratio was recently tested for the third time in the past century. What happened in the past after this top was that silver always increased in strength. In other words, a decrease in the gold-silver ratio. Once again, we expect an accelerated decrease. A first target is 50 times. If the gold price rises to 2,500 in the coming months, and the gold-silver ratio drops to 50 times, then you get a silver price of $50. In other words, silver can perform twice as well as gold in this current cycle, so investing in physical silver is a better option than physical gold. Please note that the information provided in this video is for informational purposes only and should not be considered as financial advice. You should always do your own due diligence and research before making any financial decisions. In our investment portfolio, precious metals like gold and silver aren't currently taking up a large portion. We prefer to wait for the market to come to us in the next few years. However, it's important to have some exposure to these types of investments in your portfolio. Even a small percentage can make a big difference in the long run, if our predictions are correct. When it comes to investing, it's crucial to diversify and not put all your money into one type of investment. Our portfolio includes a mix of real estate, crypto, precious metals, and cash. It's important to keep in mind that our predictions may not be accurate, and we don't want to take on too much risk. But if our predictions prove to be correct, we expect the minority portion of precious metals to become a major aspect of our portfolio. We encourage you to keep this in mind as you make your own investment decisions. That's it for today's episode. We would like to know what the percentage of silver is in your portfolio, if any. Please leave a comment below. Thanks for watching. Please subscribe so you'll never miss a new episode. See you in the next one.